Hi everyone, we are Team Y.O.L.O and today we will be doing an accounting presentation challenge. Today our team will be discussing and presenting the Nike Incorporated financial report for 2013 to 2015. We will discuss about the performance ratio of the company and compare the ratio between 2013 to 2015. Besides, we will provide strategy to enhance the business performance. So stay tuned. There are 4 types of ratio that we will be using in this presentation, which is the profitability, efficiency, liquidity and stability. Profitability is the ability of a business to earn a profit. A profit is what is left of the revenue a business generates after it pays all expenses directly related to the generation of the revenue, such as producing a product, and other expenses related to the conduct of the business activities. This can be measured by the following ratios: gross profit ratio, return on sales, expense ratio, asset turnover, return on owner's investment and return on assets. The gross profit ratio for Nike has been steadily increasing from year 2013 to year 2015. This may be due to reduced cost of goods sold, resulting in a higher gross profit. The return on sales ratio has shown an increasing trend from 2013-15, although for the year 2014 it is lower. The company then took measures to lower its operating expenses in order to generate a higher return on sales in the accounting year 2015. Hence, in order to keep the return on sales ratio high, operating expenses must be kept to the minimum by cutting costs associated with the selling of stock. The expenses ratio has been increasing from the year 2013-15. This may be due to increased sales, where the costs associated with the selling of stock increases, hence resulting in a higher expenses ratio. To keep this down, the business has to reduce its operating expenses. Asset turnover ratio is an indicator of how the business uses its assets effectively to generate revenue. In this case, the ratio shows a decreasing trend from year 2013-15, which is an indication that its assets are used less effectively in generating revenue. In order to better the ratio, the business should boost its sales figures and avoid purchases of unnecessary non-current assets that do not contribute to making revenue. The return on owner's investment ratio has shown a steady increase from 2013-15. Due to an increase in net profit. The higher the net profit, the higher the return on owner's investment, hence Nike must ensure that its net profit figures remain high. The return on assets has shown an increasing trend overall, from year 2013-15, although there was a slight decrease in the year 2014. This shows that overall, the business is effectively utilizing its assets to generate profit. By effectively allocating its resources to generating profit, return on assets can be maintained or bettered. Efficiency is the measurement of how well a company can manage income and expenses. The accounts monitored are accounts receivable and payable. This can be measured by the following ratios: stock turnover, debtor turnover, creditor turnover, cash cycle and the cash flows ratio. The stock turnover rate for Nike has been steadily increasing from 86.71 to 91.44 from 2013-15. This indicates that the stock is taking a longer duration to be sold, which is not good for the business. Nike should aim to refresh its inventory as fast as possible to prevent its items from not selling out. The debtor's turnover has steadily decreased from 46.12 days to 40.51 days from year 2013 to 2015. This is a sign that the business is taking less time to collect its debts, which contributes to a healthy cash flow. The cash cycle ratio is an indicator of the number of days taken to convert raw materials into cash on goods sold. Overall, the cash cycle ratio for Nike has shown a decreasing trend, which is positive for the business as there is more cash on hand, reducing the need to borrow. The creditor's turnover rate is increasing from 41.33 days to 44.82 days, which is a sign that the business is taking longer time to pay off its debts. This is negative to the business. In order to better this rate, the credit purchases must decrease together with the average creditors. Nike can decrease its average creditors by reducing the amount of credit purchases, hence reducing the amount of creditors. The cash flow ratio is a show of how well the business services its debts using its cash flow from operating activities. The ratio has shown an increasing trend from 2013-15. The higher the ratio, the better the business is at managing its debts. Nike should continue its operating methods in order to continue the trend. Liquidity is a measure of the extent to which a person or organization has cash to meet immediate and short-term obligations, or assets that can be quickly converted to do this. It is the ability of current assets to meet current liabilities. This can be measured by working capital ratio and quick asset ratio. The working capital ratio is an indicator of how much current assets a company has in order to cover its short-term debts. In this case, the ratio decreases from 3.47 to 2.52 over 3 years, which shows that the company is engaging in more investments on its current assets. The ideal ratio is 2 to 1, hence Nike should better utilize its current assets through investments. Quick asset ratio measures the ability of the business to cover its current liabilities with its liquid assets. The higher the ratio, the better the company's liquidity position. For Nike, its quick asset ratio has decreased from the year 2013-15, indicating that it has less liquid cash to cover its debts. Nike should reduce its inventory in order to increase its cash on hand so that it can have a better liquidity position to cover its debts. Stability looks at the long-term structure of an entity, which can be measured by the gearing ratio. The gearing ratio measures how much a business's activities are funded by borrowed capital. The higher the gearing ratio, the higher the risk is the company being unable to finance its debts in the event of a financial crisis. In this case, Nike's gearing ratio has increased from 36.56% to 41.17%, which is negative as it has to finance more debt even during downturns in business cycles. This indicates that Nike Incorporated is a healthy company as the business profit has continuously improved from year 2013 to 2015. It can also indicate that the business has a good management as the business managers have ensured that most of the performance figures are improved on from the previous year. That's all from us today. Hope you guys enjoy it and thank you for your attention.